Patrick, I want to talk a little bit about the RiverNorth Core Opportunity Fund. First off, congratulations on quite a good year last year. Both share classes of the fund were up around 12%, so that's quite a nice return as it relates to other capital markets returns. And as well, on 12/31/2016, the fund crossed its 10-year anniversary. So congratulations on 10 years of providing investors with an attractive return and what's a pretty unique methodology.
Thanks, Owen. Yeah, 10 years ago, we set out to launch a fund that was an opportunistic focused closed-end fund strategy, whereas we weren't invested in closed-end funds 100% of the time, but whereas we could buy asset classes cheaply vis-a-vis closed-end funds, and if closed-end fund discounts were not attractive, we would skew the portfolio towards ETFs, waiting for opportunity. And that was a way to just add alpha consistently over time. And I think, over a 10-year track record, we were able to prove that philosophy through.
Patrick, obviously over 10 years, there's good years and there's bad years, both on an absolute and a relative basis. Can you talk a little bit about how the fund did over the 10-year period relative to what Morningstar considers its peers, as well as its benchmark, the S&P 500?
Yeah, Morningstar has the RiverNorth Core Opportunity Fund in the moderate allocation, 50 to 70% equity exposure, and we finished as of 12/31 in the top 3% for its 10-year track record. So obviously, again, chipping away at the closed-end fund discounts proves that you can add alpha over a long period of time, and we accomplished that without taking individual company risk or security risk and big bets on sectors. So we've done it with chipping away at the exposure, not necessarily making big bets.
And how about versus its benchmark, the S&P 500?
So the S&P 500, we outperformed the S&P 500 by approximately 40 basis points on an annualized basis, so that obviously adds up cumulatively. And we've also accomplished that with a lower volatility than the S&P 500 vis-a-vis maintaining a balanced strategy at the RiverNorth Core Opportunity Fund level.
Patrick, the Core Opportunity Fund was RiverNorth's first fund launch back in 2006, and certainly we here consider it to be the flagship strategy at RiverNorth. Over the 10-year period for the fund, what are you proudest of as you cross the 10-year track record?
Well, I think first and foremost, you need to look at the 10-year track record, right? You can't look at any individual year. That said, every single year since the inception of the fund, we never were at the very, very top, and we were never at the very, very bottom. We were always in the upper middle of all asset classes. And by piecing together this alpha consistently year in, year out, what that resulted in over 10 years is the only asset class that beat us is mid-cap stocks. So you could put us up against any other asset class, and mid-cap stocks is the only asset class that outperformed us. Obviously, if you're 100% in mid-cap stocks, you're going to take a lot more risk. We accomplished that track record with a diversified portfolio over many, many asset classes, but adding the alpha through opportunistically investing in closed-end funds.
Patrick, thinking about the 10-year track record of the fund, obviously Morningstar puts it in the balanced category, which is mostly peers that just invest in equity securities and fixed securities, and you kind of get the blended return of that portfolio. How important has using closed-end funds been to the strategy over the last 10 years?
Closed-end funds are tremendously important in our strategy, obviously. Typically 50 to 70% of the fund is invested in closed-end funds. Right. The balance is ETFs and cash. And the unique alpha that we're trying to extract from closed-end funds is the discount narrowing component. So if a closed-end fund discount goes from 10% to 8%, that's 2.2% of excess return on top of the underlying asset exposure. And over the 10-year period, closed-end fund discounts have ebbed and flowed. We saw 26% average discounts in a brief period in 2008, and we saw discounts on average trading at a premium in 2012. That volatility has led us to be able to extract that discount volatility and add alpha to a diversified, balanced portfolio over time.
You bring up a very good point. So on those two bookends, 26% discounts in late 08 and then premiums in 2012, does that change the way you think about the composition of the Core Opportunity Fund, or are there opportunities underneath the averages, if you will, at all times?
Yeah, there's always opportunities in closed-end funds because you have a diversified asset mix, meaning you can get equity exposure, you can get fixed income exposure, and all the sub-asset classes from there. There's usually always some kind of opportunity in closed-end funds. Sometimes it varies though, and the beauty of the Core Opportunity Fund is we can dial up and dial down the closed-end fund exposure, right, typically having 50 to 70% closed-end fund exposure. Discounts are wider, we're going to have more closed-end fund exposure. Discounts are narrower, we're going to have less closed-end fund exposure. But you still have a balanced portfolio by utilizing ETFs in the portfolio construction.
Last question, Patrick. Not only did the fund have a nice year last year from a return standpoint, but January was also a good relative and absolute return. Any thoughts about sort of where the opportunity set exists today, and is a portfolio pretty well positioned to take advantage of what could be additional closed-end fund discount narrowing?
Yeah, if you could tell me that volatility is going to go away and uncertainty is going to go away in the future, then I would say there's less opportunity. But I don't think that's the case. I think investors are still fearful over the capital markets in general. Equity markets just hit highs, so investors are starting to be fearful over equity valuations. Same thing on credit risk assets, and then especially on duration-based assets with interest rates starting to increase. You've got fear over interest rates. All that fear will lead into opportunity in the future, we believe.
Congratulations to you and Steve again on a tremendous accomplishment with the 10-year track record, and we look forward to catching up with you in a couple months.
Thanks, Alan.